How confident are you in the economy? Because it can make all the difference in the world. What's up everybody, I am Jaspreet Singh and welcome to the Minority Mindset. The economy works like McDonald's. It's greasy. When you go through the McDonald's drive-thru, you have confidence that their system is gonna work. You drive up to the menu board and the talking box and you look at what you want and you tell them that you want a McBurger. And then you drive up to window number 1 and you give them some money for your burger, and then you drive on over to window number 2 where they give you your burger. But what happens when the system stops working? Like, let's say you go to Taco Bell one morning and you do the same thing. You drive up over to the magic talking box and you let them know you want some tacos and some extra fire sauce. Then you drive on over to window 1, you give them your money, and then you drive on over to window 2 and they say, sorry, we don't have any tacos for you, and we lost your money, and worst of all, we don't have any fire sauce. Now you're angry. Now you rush your way all the way over to McDonald's and you go to the magic talking box and you say, give me 2 McBurgers right now. So then you drive on over to window 1 and they say, sir, it's gonna be $10. And you tell the person at the window, no, I'm not giving you a penny until you give me my burgers. And they tell you, sorry, that's not how this system works. So then you drive away hungry and angry. You had money in your hand to do a transaction, and you planned to do a transaction, and you wanted to do a transaction, but you lost confidence in the system, so you didn't do a transaction. And now businesses that didn't even wrong you are suffering because of this lack of confidence. The solution to this problem is easy. Go to Chipotle and order extra guac. But this fast food dilemma is exactly how consumer confidence works in the economy. Consumer confidence is how people on Wall Street decide if you have enough confidence in the system to trust McDonald's drive-thru. And consumer confidence is also like having enough confidence to give this random guy on YouTube a thumbs up. Plus a few other things. Economists have calculated that people's spending habits depend on a few things: how much money you make, the economy and your job, and how you feel about your wealth. If you are making good money from a safe job and your retirement account is growing and you have the ability to buy or finance all the nice things you want, consumer confidence will be high. But if you feel like you're not making enough money, or you're worried about your company going bankrupt, or you see your 401k tanking, or you don't have the ability to buy or finance all the nice things you want, and consumer confidence will be low. The reason this matters is because consumer confidence will tell you how people are spending their money, and that affects the economy, your job, the stock market, and your investments. I know in the beginning of this video I said the economy works like McDonald's, but now I want you to think of the economy like the circle of life. In the beginning of the circle of business life, next to Simba, is people spending money. So now people have money and they're going out on vacation, they're going to restaurants, they're going to the mall, they're buying houses, and they're going to the Gucci store. This spending then brings you to the next phase of the circle, which is business growth. If entrepreneurs and business people see that people are spending money, this creates opportunity for people to go and start businesses and start companies because they see that there's a demand for these things out there. This business growth brings jobs, and this job creation takes you to the next phase of this circle, which is more people with money. Because if more jobs are being created, more people have jobs, and more people have money that they can spend. But before this cycle can start spinning, you have that wild card next to the beginning, which is consumer confidence. People can have money and be ready to do transactions, but if they're not confident in the economy or their job or their investments or the world, then they're gonna be scared to spend their money, and then this cycle gets stopped. But when that confidence is there, then this cycle is well-oiled and it's churning. People are spending money, so businesses are growing, which means more jobs are being created, which means more people have money to spend, which means people spend more money, and this goes on and on and on until your evil Uncle Scar comes out. In the business world, Scar isn't a lion and it isn't one random person. It is 3 things coming together: over-leverage, speculation, and greed, which fuels the desire to get rich quick. When these 3 things come together, now this wheel is gonna spin faster and faster and faster and faster and faster until ultimately this wheel pops. When that bubble bursts, that's when the cycle of business life resets, and now people don't have money to spend, which means businesses don't make money and they don't have any money to grow, which means jobs are not being created, which means people have less money to spend, which means this whole cycle is now going in a negative direction until things bottom out. Now, going back to consumer confidence is how well this wheel is oiled and how well it's going to spin, because if people are not confident, they're not going to be spending and this wheel will not spin at all. But if people are confident, they will be spending, and then this wheel will be able to move and the economy will be able to grow. Like I said in the beginning of this video, you could go to the McDonald's drive-thru with cash in your hand ready to make a transaction, but if you don't trust the system, you're not going to do the deal. The reason this is so important for you to understand is because consumer confidence fell at record speed in 2020. And the longer consumer confidence stays low, the bigger this recession will be. The fact that consumer confidence fell shouldn't be too big of a surprise though. I mean, states were locked down and businesses were closed and lots of people lost their jobs. The interesting thing is that many people believe that we are going to see a quick and relatively painless recovery, which is keeping consumer confidence from falling through the floor. Analysts believe that this consumer confidence is going to pop right back up during summertime, if not the fall. But we have a lot of uncertainty ahead. When the 2008 crash happened, a huge investment bank called Lehman Brothers was on the verge of bankruptcy. Wall Street expected the government to come out and bail out Lehman Brothers because not too long ago bailed out another bank called Bear Stearns. But the government came out and they said that they were not going to do any more bailouts. The interesting thing was what came next. The Federal Reserve Bank and the government then asked, more like demanded, every major bank, so Chase Bank, Bank of America, Merrill Lynch, and a handful others, to come together in a room and come up with a plan on how to save Lehman Brothers. So the government wanted these other banks to front the cash to save Lehman Brothers. That's kind of weird to think about because Lehman Brothers is a competitor with all these other banks. So that'd be like asking Coke to go and send a bunch of cash to Pepsi after they were on the verge of failing for selling a whole bunch of toxic drinks. In this case, Lehman Brothers had a whole bunch of toxic assets and they didn't have the money to stay alive, so the government and the Fed wanted all these other banks to now bail out and save their competitor. Why would any bank want to sacrifice their own money to bail out their competitor? Well, because of consumer confidence. The other banks knew that if Lehman Brothers, one of the biggest investment banks in the world, failed, people would lose confidence in the economy and banks. This would push people away from spending money or borrowing money, which is bad for banks. And this would also cause a run on the banks because people wouldn't trust their money at their bank. And if people pull their money out of their bank, then banks have less cash to operate. Remember, this was during the 2008 crash, so banks were already hurting and they couldn't afford to lose more cash. Long story short, these banks were working together to find the way to raise the cash to save Lehman Brothers, but the deal ended up falling through because there was a third-party deal going on as well with Barclays Bank, and that didn't work, so this whole deal failed. Well, just like predicted, Lehman Brothers failed and consumer confidence tanked and people stopped trusting banks and the economy. That's when the government came out with a $700 billion bailout called TARP, even though they said that they weren't going to do any more bailouts, but that's a topic for a different video. Now, before I get into why this matters now in 2020 and what's happening right now, if you are interested in staying up to date on what's happening in the finance and business world like this, that way you know what's happening when it's happening, well, that's why we created the free Minority Mindset newsletter, where our team first breaks down the top finance and business news, and then we show you how this news affects your wallet. That way you can be smart with your money. This newsletter is completely free, and our team will email you this newsletter Monday through Friday at 7:30 a.m. Eastern Standard Time. So if you want to join our free newsletter, you can do it by clicking the link up here or by clicking the link in the description below. By the way, this finance and business newsletter is different from our financial education emails. In May of 2020, consumer confidence is low, but it's nowhere near as low as it was during the 2008 crash because many people are hopeful and believe that the economy will be able to rebound very quickly. But what we're learning is that it's not as simple as just opening the lockdowns and letting people go back to work. We have deep economic issues right now with businesses running out of money and people not having jobs. And we can't fix these economic issues until we fix the underlying health issues first. What we're learning is that the Fed and the government can print as much money as they want and throw it at the problem, but that money is just going in a black hole until you fix the underlying health issues. Until this virus is completely gone, businesses that require your physical presence, restaurants, movie theaters, mall, airlines, hotels, and gyms are going to see smaller revenues. Businesses like these, like restaurants, might be forced to limit their capacity, which means they'll have smaller revenues with higher cleaning costs. Smaller revenues and higher costs are never a good combination. Plus, even if the underlying health issues get better faster than expected, there's some underlying economic issues that are gonna come to light over the next year or two. The government and the Fed have printed and promised an unprecedented amount of money for banks and businesses and people. But all this free money will eventually go away. When this free money fades away and the tide rolls out, that's when we're gonna see who was swimming naked. Oh my god, don't look! And that's when consumer confidence is really gonna be put to the test. If things go back to semi-normal and people start getting paid and they think, yeah, I'm getting paid, but I have 6 months worth of back rent to pay, plus penalties and fees, plus all my regular bills, that's not gonna be good for the economy. Plus, banks have made it very clear that they sense trouble. That's why they have made it harder for people to qualify to get a mortgage or a loan. And so now bank revenues will probably fall and home demand will probably fall too. Plus, the oil industry is facing their biggest crisis in history. And so there's a very good chance that some oil companies are going to fail unless the government writes them a blank bailout check. Plus, the commercial real estate business is facing their own crisis. Like, shopping malls have already been struggling, but this great lockdown has pushed and will push some businesses over the edge. And so now if stores don't have enough money to pay their rent to the shopping mall owner, then the shopping mall owner won't have enough money to pay their mortgage or loan payments to the bank. Plus, when people are worried about a recession or getting sick now, then one thing that they usually put off is buying a brand new car. And if that's the case, then car manufacturers will get hurt too. Again, I'm just a random guy on YouTube, so make sure you do your own due diligence and take everything you hear with a grain of salt. But what this all means is you need to be the master of your money and understand what's happening in the world. That way you can capitalize on opportunities when they come your way. And again, if you're looking for an easy way to stay on top of what's happening in the finance and business news, we have our free newsletter in the description below. Thank you for watching. If you enjoyed this video, share it with one friend, that way we can help spread the word. If you want to learn more about the oil crisis that's been happening, we already made a video on it and you can watch this video on YouTube by clicking this button right over here. Thank you for watching and as always, keep hustling.